millions of borrowers spent 20 years making payments, believing their remaining debt would vanish tax-free. For many, that belief is now colliding with reality. As of 2026, certain types of student loan forgiveness, especially under income-driven repayment plans, are once again being treated as taxable income by the IRS. For some, that discharge could come with a tax bill exceeding $10,000. Here's the context. The American Rescue Plan Act of 2021 shielded most student loan forgiveness from federal taxes, but that provision expired on December 31st, 2025. Because Congress did not enact a permanent extension, the tax rules that existed before the pandemic have returned for the 2026 tax year and beyond. This change hits borrowers on income-driven repayment plans the hardest. These plans cap monthly payments based on earnings, then forgive the remaining balance after 20 or 25 years. However, under current law, that forgiven balance is generally added to the borrower's gross income for the year it is discharged. Consider a hypothetical project manager earning $60,000 who has $17,000 in debt forgiven. That $17,000 may be treated as taxable income. For someone with $50,000 in canceled debt, the resulting federal tax bill could reach into the thousands, depending on their tax bracket. This is what many financial analysts call the student loan tax bomb. Why does the IRS treat forgiven debt as income? Under long-standing tax principles, if a debt is canceled, it is often viewed as a financial gain, essentially as if you were handed the cash to pay it off. While the pandemic-era relief paused this rule, it did not permanently erase it for income-driven repayment plans. Public service loan forgiveness remains tax-free at the federal level. Teachers, nurses, and government workers who complete their 120 qualifying payments generally receive full relief without a federal tax hit. Discharges related to death or total and permanent disability also typically remain exempt under current IRS guidelines. However, for those on standard income-driven repayment plans, the financial cushion is often thin. Analyses show that a majority of borrowers approaching this type of forgiveness earn $50,000 or less, and many have limited savings. For these households, a sudden tax bill can equal several months of income. There is, however, a potential escape hatch known as insolvency. If a borrower's total liabilities exceed their total assets at the time the debt is forgiven, the IRS may waive some or all of the tax. This is typically claimed using IRS Form 982. However, this process is document-intensive, requiring a detailed account of everything you own and owe. For those who don't qualify for insolvency, the IRS does offer options like payment plans or an offer in compromise, though these are subject to strict eligibility requirements and approval based on one's ability to pay. The federal bill may not be the only factor. States such as Arkansas, Indiana, Mississippi, North Carolina, and Wisconsin have historically taxed student loan forgiveness. In 2026, other states that automatically follow federal tax law may also begin taxing these discharges unless they pass specific legislative carve-outs. Because of this tax cliff, many financial experts suggest that borrowers approaching forgiveness should not wait for a legislative fix. General strategies often include estimating potential tax liability and consulting with a qualified tax professional well before the forgiveness date. The system promised relief after decades of payments, but the expiration of pandemic-era protections has changed the math at the finish line. Whether that is seen as fair or not, it is the legal reality of 2026. For those near the end of their repayment journey, understanding these rules now may be the difference between true financial freedom and a bill they never saw coming. Student loan forgiveness was supposed to mark the end of a long financial burden. Instead, for many borrowers, it now comes with an unexpected price tag. The rules have shifted and the window to prepare is closing fast. If you're years into repayment, don't assume forgiveness means freedom. Check your plan, know your state's stance, and start planning now.